Okay, now this is how I set up my charts when I'm looking to really analyze an individual product. So today we're just going to focus in this early period on the Aussie dollar. So when I tell people what's the big, well, I was interviewed by a magazine yesterday, no one particularly of note, but they were asking me what's the biggest pitfall to people that start spread betting and intraday trading. Now the first thing I said is that people, when they think about intraday trading, they automatically think they need to be a scalper. So they need to look at the minute charts to see every opportunity in trade. Now the first problem is when you're trading anything on a spread betting platform is you're paying a spread. So no matter what time you press that button, you're paying the spread, you're going to be offside. So looking at minute candles, you're going to get too much information. Now this is the 5-minute chart here, so change that to a minute chart, okay? Think of it in relative terms, okay? Here's a day, here's a daily candle here. That day is made up of 7, 8, 9 hourly candles, okay? Well, days down here. So each one of these is made up of a number of these. So the hourly is made up of 4 of these 15-minute charts, okay? So that's a lot of data to take in. So if you're going to flick to the minute chart, yeah, how much are you getting? You're getting so much more information, and what's it actually telling you? Well, the market's telling you that it's ranging, okay, on the minute chart. What's that really telling you? We've got as high as here as 1.3240, okay, and as low as here as 1.3209 on the minute. But how is that giving you a signal? Where would you buy and sell in any of that? So you flick straight onto the 15 minutes here, you're already starting to get some more information, okay? The market's telling you the same highs and lows that it does in the minute chart, but it's telling you that it rejected it here, it rejected it here, and it rejected the breaking below this support here at 1.3171. So, and likely, the likely effect of the market in the short term is going to be going up. So all these like wicks, the lows of the bottom of the candle, are showing that we've tried to touch lower and bring sellers into the market. The sellers have rejected it, pushed the market back up, and are finding support here at 13220. That's what the market's telling you. If you look at all these individual candles themselves, they're not really telling you anything. So what I'd like to do is have just a 5-minute chart here that shows that what the market is doing. That's really like your volatility scale, I would say. So I've got a simple moving average here that shows the market's moving up. Okay, that moving average doesn't tell you anything else apart from when we try and break and close below the moving average, the market rejects it. Okay, then we break above the moving average and go higher. Okay, that's all the 5-minute chart's telling us. So when I say you should intraday trade and what the time frames you should use, is you use 15-minute candles with an hourly view. Okay, so that means that every 4 of these 15-minute candles, yeah, each one of these you can use for your entry points, but each 4 closes, each time 4 15-minute candles close, you get an hourly signal. Okay, so we look at the hourlies. This is where I like to focus and concentrate the majority of my time. Okay, now if you've been watching my Twitter feed, I introduced hashtag Bob levels. So Bob levels are break or bounce. These are key levels in the market of where the market is going to try and hit and test. It's the extremes of the market in intraday trading, and the market will do one of 2 things. It will break through that level and try to hit the next Bob level, or it will bounce off it. Now, I would say of the 20 calls I've made in the last month, 18 were pretty good. I mean, I'd say 4 or 5 were to the pip of when we were breaking or bouncing. Okay, so these are very, very important levels in the market. Now, the way I generate signals, and I generate these lines, people can say they look complicated. Okay? They're not complicated at all. All I use, is when I say use your small time frames, your 15-minute, 5-minute for your volatility and your entry points, you use your higher time frames, your hourlies and above for your exit. So if you're going to look at a chart, okay, you look at the monthlies, you start on the highest time frame you can. What's that telling you? Well, the market is telling us we've got the simple Bollinger Band, 20 periods, okay, so this is your moving average. The market is telling us that we're in between the range. We've got key resistance up here at 1.08000, key support at 0.98490. So we're right in the middle. We're trading right on the moving average. So that's telling us that the market is ready to move in a direction. And the overall trend really, when you look at the monthly chart, is still up. Okay? We've gone from the lows, we've gone to the highs. If you want to do a Fibonacci to see where we're trading, that's an easy part. Okay, so the up move started here. We've got as high as here. So the market really has tried, not really aggressively tried to hit the 50%, because 80% of the time we know a market will look to hit a 50% retracement. It doesn't. Doesn't get as low as the 32, but finds support on the 23.6. So that tells me if the market now on the monthlies was looking to retrace that initial move, it'd have done it by now. So the trend is going to continue. Okay, that's basic, simple trading, charting analysis. So on the monthlies, it's telling us there's room on the upside. So if we know that the next logical target is going to be up here, the monthly area of interest. But it's going to take some time to get there. So what do? Move down to the weeklies. What does the weekly tell us? Well, the weekly is even nicer. Okay, the weekly showed that the market again has found some tops up here, just above 10556, but then come down. Okay, so we've come down to the lower end of the Bollinger Band. We've rejected closing outside it, so we're moving back up. Okay, so the market for me now on the weeklies is still bullish. Bullish because it wants to touch the moving average. So the market wants to get up to the levels here at 1.3919. Okay, so you can see I'm building it up. Middle of the range on the monthlies, but the overall trend is up. Weeklies, okay, we'll look to be in the lower of the range on the weeklies, so that's telling me you've got loads of value here. Loads of value to buy from here to here. You know, 50, 60 ticks. They want to move up, another 250 ticks up here to the upper end of the Bollinger Band, these other highs. But we're buying into value. Dailies, even better. Bottom left, what does it tell us? Touched on the lows of the Bollinger Band, couldn't really close significantly outside the Bollinger Band, hit this level of support, which is a weekly level of interest, at 102554, bang. Market finds support, market moves up. Okay, so somebody's saying that, okay, we've just got a few questions, let's go back. Okay, we're talking about gold, that's fine, okay, we'll talk about gold in a little bit. If you're short gold, that's fine, but we'll have a look, don't worry. If anybody's short the Aussie dollar, then we'll get worried. Okay, so what's that telling us? On the daily, okay, market's rejected these lows here. The bottom of this move, a hammer formation, on the daily candle, you're buying as many Aussie dollars as you can. Buy as many as you can, it's only going up. So logically, we have to see now that we know the market's got room to move up to the midpoint here on the dailies. So let's translate that into hourly terms on something we can trade right now. Okay, so if you're looking at the hourly chart, we know that the market is going to look to test a bob level break or bounce at 103439. The market breaks above that, we've got a level very close at 3473. Above that, the market wants to test 3792 and 3900. Okay, so look at an hourly chart. We can see the market really trending sideways, broke out here, these tops, then found support at 1.0286, so the market's going to move higher. To be honest, I've got the Aussie dollar open now, so I'm just going to start buying it at market. Okay, so I'm long the Aussie dollar now, so I've just that's my trade now. I can see that, you know, the market's kind of rejected. If you look at this individual hourly candle as well, we just use these simple tools time and time again. Fibonacci. Okay, Fibonacci. It's hit the 50%. Couldn't close below it. It's found support on the 38, found support on the 23.6. What's the next logical point the market wants to test? It's up here. So not a massive trade, okay, but it wants to test above here. So we need to break these previous highs in the hourlies. Okay, we might see the market come back to 23.6. The next point the Aussie dollar wants to trade and test is here. So that's what I'm going to hold on for. 103439. Long the Aussie dollar. Okay, so that's how you live chart things. That's how you build up your opinion. Okay, we're way above the moving average. We've rejected these lows, okay, the low end of the Bollinger Band. So I'm using very simple charting techniques. A little bit of Fibonacci on the hourlies, weekly, daily and monthly points of interest, and a few Bollinger Bands. I mean, that's hardly the world's most technical trade. But the whole point of trading I keep teaching people is not knowing what other people don't. It's knowing what everybody else is looking at. Okay, so everybody else is using standard MetaTrader indicators or standard charting indicators. Okay, people that use Ichimoku Cloud, you know, 57-day moving averages with a cross, they're trying too hard. Okay, with all due respect, people that do things like that are not clever enough to understand what these charting techniques mean. Now that's, you know, again, I'm making some bold statements today, but this is 10 years of being in the markets, 10 years consistently making money. And being a professional risk manager, floor manager, and Chief Market Strategist of InterTrader. Okay, these things happen, and traders go for these things for a reason. You have to look at building momentum. Momentum comes in, market comes down, can't hit the lows. Momentum comes in, market can't come down, can't hit the lows. What's the market doing now? Broke the highs, moving higher. Where do you think it's going to test? The top end of the Bollinger Band and these levels of interest up here. So our trade's on side right now. Okay, so it's going to take time. It's very unlikely that this candle's going to just go from here to here in the next, 43 minutes. But you never know. Stranger things have happened. But we're getting long on a number of technical reasons and by reading charts. Okay? So you have to understand the logic here.